Why are experts buzzing about an impending market shift?
That's right. Today we dive into insights from financial analysts across the board, from Trade Brigade to Harry Dent.
We've harnessed artificial intelligence to condense their discussions into bite-sized insights, saving you precious time.
Expect to uncover the potential of a Santa rally and the economic factors pushing gold prices to new heights.
Get ready, because the market insights are about to get intense. Today, we're analyzing potential market movements around the holidays.
The analysis suggests that the Santa rally could lead to new highs in the market.
The Trade Brigade indicates that December is historically a strong month for markets.
There is evidence showing a pattern of rallies during this time known as the Santa rally.
The Trade Brigade notes that sentiment among investors is often heightened during the holiday season.
This sentiment often leads to a boost in market activity and corresponds with gains. Trade Brigade analysts are optimistic about a continuing rally and new highs.
They stress the importance of monitoring market patterns closely, particularly during seasonal shifts. What are the analysts' expectations for the market as we enter the new year?
They predict that a Santa rally could lead to strong short-term market performance.
However, they warn of the possibility of corrections based on early 2023 economic data.
The Trade Brigade provides insights into expected market behavior this holiday.
Investors need to stay updated as the new year approaches and be prepared for volatility.
Balancing short-term opportunities with long-term strategies is essential as the Santa rally unfolds. Today, we're reviewing insights from Stephan on the latest market trends affecting investors.
Graham emphasizes the importance of understanding these shifts to informed investment choices.
Stephan observes that the markets are currently facing significant volatility.
He notes that this uncertainty is shifting investor sentiment towards a more cautious approach. Graham explains that rising interest rates influence borrowing costs.
He mentions that inflation worries are creating overall market instability. According to Graham, investors are becoming increasingly risk-averse.
He highlights a tendency towards safer asset classes in light of current conditions. Looking ahead, Graham predicts continued market fluctuations.
He advises that investors should focus on long-term strategies, prioritizing stability. Graham concludes that staying informed about economic trends is essential for investors.
He advises diversifying portfolios to help mitigate risks in volatile situations.
Today, we're analyzing the new trade signals issued by the technical traders regarding stock indices and precious metals as we enter the holiday season.
This analysis highlights potential bullish movements in these markets, offering insights for investors looking to capitalize on year-end trends.
The technical traders note that current indicators suggest a strong holiday rally in stock indices.
They also mention that precious metals, particularly gold, are showing remarkable strength that could complement the equities rally. According to the technical traders, historically, the month of December tends to yield positive returns for stock indices.
What factors are driving this seasonal trend?
High investor sentiment and liquidity from holiday spending contribute significantly.
The technical traders highlight that gold prices are climbing due to increased market volatility.
They note that investors are often turning to precious metals as a hedge against economic uncertainty.
What specific trade signals should investors be aware of?
The technical traders have identified key patterns signaling potential entry points in both equities and precious metals.
What does the technical traders predict for the rest of the year?
They anticipate continued bullish momentum in the stock market through the end of the year.
How does holiday consumer spending influence market performance?
The technical traders emphasize that increased consumer spending can significantly drive market performance during the holidays.
The technical traders recommend monitoring holiday spending trends as a key market indicator.
They also advise considering precious metals as a protective investment amidst ongoing volatility.
Welcome to Eurodollar University. Today we are analyzing the recent gross domestic product growth trends highlighted by economist Dr. Michael Roberts.
Dr. Roberts emphasizes that recent GDP figures indicate a strong recovery in economic activity, leading to optimism among investors.
Dr. Roberts explains that a rise in consumer spending has contributed significantly to this GDP growth.
John Franklin notes that this increase in consumer spending might influence monetary policy decisions from the Federal Reserve.
According to Dr. Roberts, consumer spending saw a significant rise in the last quarter.
This increased demand indicates an economic rebound that could support further growth. John Franklin emphasizes the potential for the Federal Reserve to adjust monetary policy in response to GDP growth.
Dr. Roberts advises that monitoring inflation closely is crucial as it may affect the Fed's decisions. Dr. Roberts predicts that if consumer spending continues, we could see sustained economic growth.
However, John warns that market volatility may arise due to adjustments to monetary policy.
To conclude, Dr. Roberts emphasizes that investors should focus on sectors likely to benefit from rising consumer spending.
John Franklin adds that monitoring interest rate changes will be essential for informed investment decisions.
Today, we're examining predictions about a potential market crash in 2026, featuring insights from Harry Dent.
Dent believes that the upcoming downturn could be unlike any we've historically encountered.
Harry Dent claims the financial world in 2026 will see a downturn unprecedented in severity.
He stresses that evaluating historical trends helps us prepare for what's to come. Dent emphasizes learning from past crashes to prepare for future market shifts.
He highlights the importance of historical context in current market assessments. David Lynn identifies essential economic metrics that may signify upcoming market volatility.
According to Lynn, awareness of these developments is crucial for effective investment.
Dent projects that warning signs of a market downturn will emerge before 2026.
He advocates for early strategic adjustments to protect against impending financial losses.
Dent advises a reassessment of investment portfolios based on anticipated market conditions.
Both Dent and Lynn underline the necessity of staying informed and proactive in investment planning.
Today, we're reviewing an analysis by Peter Grandich on the state of gold, shared with host Julia LaRoche.
Peter highlights significant fears as gold approaches the $5,000 mark.
Peter Grandich suggests a potential for gold to reach $5,000.
He expresses concerns over factors influencing this price, particularly inflation. Peter emphasizes how rising inflation pushes investors towards gold as a safe haven.
This can lead to short-term fluctuations as markets adjust. What does Peter Grandich think about the economic landscape affecting gold?
Peter argues that economic uncertainty drives investors to gold as a hedge.
What does Peter foresee for gold prices in the future?
Peter anticipates that ongoing trends could lead to gold hitting the $5,000 target soon.
Peter Grandich concludes that with gold nearing $5,000, it's time for investors to reassess.
He stresses the importance of tracking economic indicators that might influence market shifts.
Wow, what an impressive lineup of insights we've had today.
Absolutely. Each guest shed light on different facets of our current economic landscape.
Peter Grandich voiced concerns about gold prices nearing that $5,000 mark. That's huge.
Right? While Harry Dent is sounding the alarm over a potential crash in 2026, that's quite a timeline difference.
Then we also heard Dr. Michael Roberts breaking down GDP trends, which is paramount for investors.
And let's not forget the technical traders predicting bullish momentum in stocks and gold. Talk about optimism.
Exactly. Yet Stephan highlights a shift in investor sentiment, which adds a layer of caution.
It's fascinating how they all share the agreement that being informed is essential to navigate volatility.
And the disagreements really show the multifaceted nature of investing today.
If you found this discussion valuable, hit that like button and subscribe to our channel.
Your support helps us keep bringing these insights right to you.
Don't miss our next video where we'll analyze global trade dynamics. It promises to be just as insightful.
Thanks for watching, and until next time, keep your investment strategies sharp.